this is basically it right here. It's super simple. And I found that if you have the EMAs up on your chart, it follows this in some way, shape, or form pretty much every single day on various time frames. And depending on how quickly you want to be in and out of trades or how long you want to be in trades, with confidence that the trade is still going in your direction, then using this strategy is really going to help you as you move forward. So from the top to the bottom is explained here, and then from the bottom to the top explained here. And then if you look at this on a macro scale, this would be the entirety of the intermediate trend, or just sort of a leg of a longer intermediate trend that you could take advantage of on an intraday scale. Let's first look at what happened yesterday, where we found the bottom and popped up, and then today where we found the top and came down on SPX. And then we'll see how this strategy works using 3 time frames to fill the criteria and give you confident entries and exits. So I'm going to flip back over to a clean chart on SPX, starting at the reversal extension of yesterday. I'm going to maximize the 15-minute frame. A really quick way to do this is just hold down Alt and click, and it'll bring you to the chart that you clicked on, and then the same thing to get back out. Quick moves on different time frames. So we went down all day yesterday from the 200 EMA bounce to this point right here, this 40.6134, which would have been the reversal extension. So this is as far as it extended down in the reversal before making its move back up. The picture looks a little bit less clear with the steps if you're looking at just one time frame. So that's why I combine them. You can see where it first starts to overtake the shortest EMA, either an 8 or a 9, depending on what stock you use. It's just going to take some getting used to experimenting with different things to see how that specific ticker that you're working with reacts to the short length EMA that you've chosen. And this is why I line these up. So we're looking first at the reversal extension from yesterday's bottom. And it all starts with the crossback of the EMA. So once the crossback has occurred, the extension has taken place. We're looking for a wedge pop, which is the next step. We'll be finding it on lower time frames to see if what we're thinking is actually occurring. Now, when all your time frames are aligned, you can see we might have found a bottom here with the crossback. The first wedge pop would take place on a smaller time frame. So you work from you get the big picture of the move that you're trying to take advantage of on your 15 or whatever you use, and then work backwards to see if it's corresponding to the steps. So we cross back, we wedge. This would be the wedge pop into the full EMA crossback, and that's where you can take your first entry if you'd like, with your 8 or 9 EMA being your stop loss. So it bottoms. You can see even on the 5-minute time frame, it wedges. So it completes the first step. So it reversed, it extended, it wedge pops. So once it overtakes the 8 and the 20, it consolidates and then moves to a higher leg up. So right here, the wedge pop. You can see if you're seeing it start to wedge, you see it bottoms on the 15, you see it start to wedge on the 5, you might look for your entry here on the 1. So that breakout and hold of the 8 and 20 cross is going to be where you're going to want to enter. And then you'll use that same 8 or 9 as your stop loss.